It begins with tension. Political debates have long simmered beneath the surface, partisan divisions growing, public trust in government eroding. But suddenly, discontent erupts into mass protests and organized uprisings across cities, towns, and rural areas alike. The American people, frustrated by systemic inefficiencies, perceived corruption, and unfulfilled promises, revolt against the political system and government. Streets fill with demonstrators, government buildings are occupied, and federal institutions are disrupted. The immediate consequence is social instability. Law enforcement and emergency response systems struggle to contain widespread unrest. Civil services are disrupted as employees either join protests, are furloughed, or face unsafe working conditions. Public transportation, healthcare services, and education systems are interrupted. Citizens face uncertainty regarding access to essential services, food, and safety. The fabric of daily life is profoundly altered. Financial markets respond with shock. Stock exchanges experience historic volatility as traders attempt to account for uncertainty and political risk. Indices such as the S&P 500, Dow Jones, and NASDAQ plunge as investors panic over governance instability, potential policy paralysis, and economic uncertainty. Mutual funds, ETFs, and institutional investment portfolios experience cascading declines. Wealth tied to U.S. equities evaporates, affecting retirement accounts, pensions, and household finances nationwide. Businesses face immediate operational challenges. Corporations, small and large, experience labor shortages as employees participate in or are affected by unrest. Supply chains are disrupted as transportation networks are blocked. Ports and logistics hubs face operational delays and production lines halt. Service industries, particularly those reliant on public gatherings or government contracts, experience sudden revenue collapse. Businesses reassess risks and may downsize or close entirely. Employment is dramatically affected. Millions of workers are displaced due to closures, operational halts, and economic uncertainty. Job losses span sectors, including retail, hospitality, transportation, manufacturing, and finance. Social welfare systems are overwhelmed as unemployment spikes, creating demand for federal and state support far beyond historical norms. Long-term structural unemployment becomes a pressing concern. Government operations are paralyzed. Federal agencies, including financial regulators, healthcare administrators, and infrastructure managers, operate at reduced capacity or cease functioning entirely. Legislative processes stall, policy implementation halts, and emergency response coordination becomes fragmented. Citizens and corporations lose confidence in the government's ability to maintain order and stability. The political vacuum amplifies economic uncertainty. Corporate governance is destabilized. Publicly traded companies experience leadership challenges, operational disruption, and shareholder unrest. Board decisions are delayed, financial disclosures postponed, and strategic planning halted. Investor confidence wanes as uncertainty about regulatory stability, taxation, and enforcement grows. Companies dependent on government contracts or regulatory approvals face heightened risk of failure. Banking and credit systems experience strain. Depositors withdraw funds in anticipation of instability, creating liquidity pressures. Loans, mortgages, and credit lines are disrupted as borrowers face income uncertainty. Banks adjust risk models, increasing interest rates and tightening lending criteria. Small businesses and households find access to credit restricted precisely when financial support is most critical. Government-backed lending programs attempt to mitigate the impact, but are constrained by operational challenges. Consumer behavior shifts dramatically. Fear of civil unrest reduces discretionary spending, tourism declines, and retail activity slows. Households prioritize essentials, drawing down savings to cover living costs amid employment instability. Luxury goods, entertainment, and non-essential services face revenue collapse. Businesses reliant on discretionary spending restructure or shutter entirely. Economic contraction deepens as confidence evaporates. Public infrastructure and utilities face secondary disruption. Power grids, water supply systems, and transportation networks operate under strain due to labor shortages, vandalism, or security threats. Maintenance schedules are disrupted, leading to localized outages and service degradation. Energy providers, water utilities, and public transit agencies face operational risk that further destabilizes everyday life. Stock markets reflect systemic anxiety. Securities linked to domestic operations, government contracts, and infrastructure face particularly sharp declines. Volatility indexes reach unprecedented levels, reflecting uncertainty across equity, bond, and derivative markets. International investors reduce exposure to U.S. assets, causing currency depreciation and increasing borrowing costs. Hedge funds and institutional investors hedge against political risk, further fueling market instability. The industrial sector experiences operational halts. Manufacturing plants reliant on steady energy supply, logistics, and workforce participation suspend production. Supply chain bottlenecks cascade across sectors, affecting automotive, aerospace, electronics, and consumer goods. Inventory management becomes complex, with stockpiles increasing for some goods and shortages appearing for others. Export-dependent industries suffer due to uncertainty and trade disruptions. Global trade is impacted. International partners dependent on U.S. goods and services face delays, contract renegotiations, and potential losses. Export orders are canceled or postponed, affecting global supply chains and international financial flows. Commodities markets experience volatility as investors adjust for political instability. Global trade routes adapt to reduce reliance on U.S.-based production, creating long-term structural shifts. Insurance and risk management industries are stressed. Property, casualty, and life insurers face elevated claims from civil unrest, property damage, and operational disruptions. Premiums rise, coverage becomes more restrictive, and companies reassess risk exposure. Agricultural insurance, commercial property coverage, and business interruption policies are particularly affected. The cost of doing business rises in proportion to perceived risk. Corporate investment slows dramatically. Capital expenditures, mergers, acquisitions, and research projects are postponed or canceled due to uncertainty. Innovation pipelines, infrastructure upgrades, and expansion plans are delayed, reducing long-term productivity growth. Companies focus on survival rather than growth, exacerbating the economic slowdown. Energy markets experience price shocks. Disruption in distribution networks, operational uncertainty, and reduced industrial consumption lead to volatile pricing in oil, gas, and electricity markets. Strategic reserves may be deployed to stabilize supply, but market sentiment remains fragile. Investors anticipate supply-demand imbalances, amplifying commodity volatility. Healthcare systems face unprecedented challenges. Hospitals, clinics, and emergency services operate under strain due to staffing shortages, operational disruption, and rising demand from civil unrest-related injuries. Pharmaceutical distribution networks are interrupted, delaying treatment for chronic and acute conditions. Public health crises escalate amid resource scarcity. Housing markets experience uncertainty. Mortgage defaults rise as employment declines and income streams falter. Property values decrease in high-risk areas due to social instability. Construction projects are halted due to labor shortages and financing constraints. Real estate investment trusts, residential developers, and urban infrastructure projects face revenue disruption. Rural economies are destabilized. Agricultural production faces labor disruption, transportation challenges, and supply chain delays. Commodity pricing volatility impacts farmer revenue and operational sustainability. Small towns dependent on agriculture, manufacturing, or regional service industries see economic contraction and population migration to more stable regions. Corporate bankruptcy rates increase. Small and medium-sized enterprises, heavily dependent on local economic stability, face insolvency. Larger firms experience financial strain due to operational disruption, revenue declines, and market volatility. Legal systems are overwhelmed with bankruptcy filings, debt restructuring cases, and contractual disputes. The corporate ecosystem faces widespread contraction. Public trust in institutions erodes further. With government unable to provide consistent oversight, regulation, and enforcement, social cohesion weakens. Protests, strikes, and local governance challenges intensify. Confidence in legal systems, financial regulation, and public safety is severely diminished, further discouraging investment and consumer spending. Education systems are disrupted. Schools and universities face closures, operational limitations, and enrollment decline. Students experience interruptions in learning, workforce training pipelines are affected, and long-term human capital development suffers. Future labor markets face skill gaps, reducing productivity and economic resilience. Transportation networks face operational challenges. Public transit, freight rail, trucking, and aviation experience labor shortages, security threats, and infrastructure disruption. Delays, cancellations, and route rerouting affect domestic commerce and international logistics. The cost of moving goods and people rises sharply, impacting prices, supply chains, and profitability. Financial markets experience cascading risk. Bank liquidity, corporate credit, and investor confidence decline simultaneously. Securities linked to government operations, infrastructure, and regulated industries face heightened volatility. Institutional investors diversify away from U.S. assets, creating long-term shifts in portfolio allocations and risk management strategies. International confidence in the U.S. economy is shaken. Foreign investors, trading partners, and multinational corporations reassess exposure to U.S.-based markets. Currency depreciation occurs amid capital flight, while international credit markets adjust interest rates to compensate for perceived risk. Geopolitical influence diminishes as domestic instability undermines global authority. Social unrest intensifies economic consequences. As protests and uprisings continue, local businesses face repeated closures, damage to property, and security costs. Insurance claims rise, law enforcement expenses increase, and regional governance is challenged. The economic cost of social instability becomes visible across sectors, from retail and services to manufacturing and logistics. Corporate innovation and R&D are delayed. Technology firms, pharmaceuticals, and manufacturing companies reduce research spending amid uncertainty. Patents, product launches, and technological advancements are postponed. Competitor nations accelerate innovation, capturing market share as U.S. firms face operational disruption. Recovery is slow and complex. Post-revolt economic rebuilding requires coordinated government intervention, private sector reinvestment, and social stabilization. Infrastructure repair, labor market restoration, and corporate restructuring take years. Stock markets gradually regain confidence, but investor psychology remains cautious, emphasizing risk management and diversification. Global economies experience ripple effects. Countries trading with the U.S. face delays, supply chain disruptions, and financial exposure. Commodity markets adjust to U.S. instability, affecting prices worldwide. International policy recalibration occurs as nations shift strategic planning away from reliance on U.S. economic stability. Ultimately, a revolt against the U.S. political system is a scenario of unprecedented economic, social, and financial disruption. Stock markets, corporate America, public services, and international trade are profoundly affected. Recovery demands strategic planning, investment, and societal adaptation. The scenario underscores the fragility of interdependent systems and the critical importance of political stability for economic resilience. The story of nationwide political upheaval demonstrates how domestic governance, social cohesion, and public trust are directly tied to economic stability. Civil unrest reverberates through every sector, from Wall Street to rural America, from public institutions to global markets. It is a stark reminder that social and political stability are foundational to financial prosperity, and their disruption can reshape the U.S. economy for decades.